In this presentation, we will add expense transactions from our bank feeds into QuickBooks Online. Here we are in our Get Great Guitars file. Note, however, that if you do not have access to a separate file like our practice file here and you don't want to manipulate your data, you can work for this type of situation with the test file that QuickBooks Online provides. You can find that file by searching on an internet browser for QuickBooks Online Test Drive. And then you're going to find something like this, Test Drive QuickBooks Online. This is basically their practice file that you don't need any subscription for in order to do. So anybody can take a look at it. That's a good practice file. You can't really practice uploading and connecting the bank feeds. However, you can do some practice with regards to the recording of transactions. Obviously, when you go out or back into a file such as this, it's going to not save the data. But it will save the data pretty well as long as you're in the file. So we're going to be going to the banking tab here, and we're going to be going to our transactions, our banking transactions. And as we enter data in our side, you can look for similar transactions here if you would like to, and use this to interact with QuickBooks Online as we go. Back to our test file, I'm going to first open up a few reports before we get into the transactions so we can see those reports once we enter this information into the system. So we're going to go to the reports down below. We're going to be opening up our favorite two reports, those being the financial statements starting with the balance sheet. So I'm going to open up the balance sheet. I'm going to go up top. I'm going to change the dates from 01/01/20 to 12/31/20 so we could see the effect on the financial statements on the balance sheet. Then I'm going to duplicate this tab. This is a nice feature because you can have multiple tabs open. I'm going to right click on the tab up top. I'm on the tab up top, right clicking on it. I'm going to duplicate it. So now we have a tab to the right, a tab to the left. I'm going to do the same thing with the P&L or profit and loss. So I'm going to go to the first tab, go back down to the reports down below. We're looking for the second favorite report. It's always going to be in the favorites up top, usually these two, because they should be, because we should be using them a lot. And then we're going to go back up top. We'll change the dates up here from 01/01/20 to 12/31/20. We're going to go ahead and run that report. And then once again, I'm going to duplicate the tab up top, right-clicking on the tab up top and duplicating it. So there we have that. Let's go back over to the balance sheet. And we're going to be focusing in on the cash account. So if I go into the cash right here, into the checking account, here's the detail we have so far. You'll recall we only have January and February worth of data. We have entered this time March. So we're going to enter March. March is going to be mirroring, or the bank statement mirrors the activity that happened in January. All right, so let's go back to our first tab. Now we're going to go to the banking information. We're going to go to the banking information on the left-hand side. Once in there, you might want to close the old hamburger up top, give yourself a little bit more space. And there we have it. Now we're going to go in here and I want to first look at expense type transactions. And to see this as to why this would be, let's first take a look at our flowchart. This is on the QuickBooks desktop version, so it's not online, but I just want to look at the flowchart for us. We're looking at the first side, the expenses. I want to think about expenses or decreases to our checking account. Now, this is usually the easiest thing because small businesses, when you talk about like the phone bill, utility bill, and so on and so forth, they don't care about going through, oftentimes you don't care about it going through the AP account, and it's just an accrual type, it's just non-accrual. The accrual and cash, both of those methods would result in essence, the same transaction, just for different reasons. So that means this one's the easiest one to convert, really. So if you're writing checks, and you're just simply writing checks, then that's the easiest thing for a bank feed to do because there is no accrual component unless you're using the bill first and then entering the check. So I'm looking for those types of transactions first to think about, basically the month-end kind of bills that we would write. Those will be easy things to add here. So if I was to minimize this, we'll see more of them next time. But if I was to minimize this and go into our bank feeds and I look at the transactions, these are the received payments over here. Now the received payments had nothing in the description, so they basically put a check in the description. That's like what they did for a default. So we're gonna have to change that information. We have the description line up top, obviously the date. The payee here, so we have some of that populated down below, and then the category or match. This is something that we're typically going to have to change because note the categories they put in here. This wasn't in our Excel sheet. This is the categories that they're trying to guess and help us out with. But notice uncategorized income. That's not something we want to use. And uncategorized, this one might be right, And they're pulling this from prior data that I have in my system here. So this one you might not see that same kind of thing, but QuickBooks is trying to help us out. They're trying to guess, and that's what QuickBooks will keep on doing. And if we feed it the right information and keep on correcting it, QuickBooks will then at some point be correct on these kind of guesses, and that's what we want. That'll start making things very easy. So then we have the amount that's spent and the amount that is received, and then we have the actions that we can take here. If I want to look at any more detail in any of these items, I can select this item, and I can take a look at the more detail within it, including entering the vendor, the category. We'll talk about finding matches later, and recording. We'll talk about these items later. We're going to be basically up here on the add function for this section. We can also do this in bulk, of course. We can select in bulk multiple transactions, do batch actions here, such as accept the selected items, exclude, or modify. However, when we first put the information into the system, we can't really do the bulk stuff, mainly because the QuickBooks doesn't know what to do. Everything is not quite right. These categories, for example, are not quite right, and the vendors and the customers will typically not be quite right. All we have that is right, that we know is right, is the date of the transactions, the amount, because they came directly from the bank. We're going to have to then fix and adjust, and possibly in the payee. In our case, the payee is being pulled over pretty good because we entered the payee. But note again that QuickBooks would usually have to be dealing with that long list of data that they have from the bank and guessing, this information here based on that. And then the category we're obviously going to have to adjust. So let's think about the easiest one first. If I go up top, this is going to be the amounts received. I'm not going to go into the deposits yet. We'll talk about that later. Here's a check, but it's going to E-Trade. That's our investment company. So it's not like a normal expense. I'm not going to do that. Here's a check or something going out. I'll call it a check, but it's going out. But it's for $16,000. That's kind of high. So I'm kind of guessing that's not a reoccurring type of thing. That might be a one-time thing. This one's going out, but it's for $7,000. Again, pretty high number. It's probably not something that occurs every month. I'm looking for those things that repeat every month. This one's for $400, and I recognize this vendor. For me, that vendor is Epiphone. That's who we buy. We buy and sell guitars in our practice problem. Epiphone's one of the vendors that we use to buy and sell guitars from. And so that one's a little bit more complicated than just a normal expense that would happen each month, like a phone bill or utility bill, because it's going to depend on my needs in terms of inventory tracking. So this one's going to be more complicated. I know Gibson is spelled wrong, but Gibson is also a vendor that we buy from. This one here, Edison, that is one that sounds like the electric bill, right? So that's the one I'm going to take a look at this time. You would think it would be a reoccurring transfer that we would have multiple, every month. It would be going to Edison. Now, if I was to look at my transactions up top for Edison, let's see what happened in January when we recorded Edison, or the last time we recorded an Edison transaction. See, I'm going to search for the name of Edison. Here it is. And if I find that happened in January, this is going to be a repetitive process. It was recorded as an expense, which is basically like a check with no check number, decrease in the checking account. The other side going to utilities. So that's what I would expect then to do with the bank feeds now. So I'm going to go back into the bank feeds. I'm going to say, well, obviously this is a decrease. And the other side I need to make go into an expense account, which is going to be the utilities account. So what I'm going to do is I'm going to select this item. Now we have the vendor. Now for me, it's added the vendor already because this is data that we've had in the past. If it doesn't add the vendor, you can add it directly here. Note, if you don't have any vendor, you really want to add the vendors. You really want the vendors because that gives you a lot more information for you to sort your financial data from. Like if you don't have the vendors, it's harder to sort like different type of reports. You may still be able to populate your major financial statements, the balance sheet and the income statement, but you won't have to have those sub reports that'll kind of show you how much you paid, by vendor, which is really nice to have, especially when you need to do things such as look at whether or not you need to pay someone 1099 information. You're going to need to sort by vendor to do that. So you want to get in the habit. If it's payment going out, it's going to be a vendor, add the vendor. You don't need to add all the detail. You can just quick add it typically, unless you want the detail, but you do typically want to have the vendor in it. Then the category. Now, QuickBooks just picked a category, didn't know where to put it. It's basically telling us when it says uncategorized expense, QuickBooks is telling us, hey, I had no idea where this goes. You're going to have to tell me, and then I'll figure it out next time. That's what it's saying. Like QuickBooks is talking to you here. This is what it's saying. And so what we're going to do is we're going to say, okay, I'll tell you what the actual expense category will be. And then next time it'll be able to populate that, as we'll see in month 2. Hopefully it'll pick that up and populate it for us. So we know that it should be going to utilities. So I'm going to say I need this to go to utilities. That's going to be the item there. We're not going to have it billable for a customer. If this is something that I wanted to later put on an invoice, I could use that billable information. And we could put memos, more memos the better. If you put a memo in here telling, for example, it's an electric bill, when the electric bill expense was expired or happened or whatnot, you can put that. Not necessary. The vendor, necessary. Category, necessary. Memo would be great, but it's not required to record this. And the vendor may not be required, but again, you really kind of want it. Now also notice what it's doing down here is it's telling us, hey, we're going to set Edison to the utilities from now on, which is great. So we're going to say that's fine, or we can edit this setting if we so choose to as well. So that's normally really good because it's the utility bill. It's going to see Edison. It's going to post it then to the utilities expense like we would want to. However, if we had multiple different utilities expenses, for example, by location or something like that, then we may have to say, hey, I don't want you to do that because it's going to, we might have to set up some more complicated rules. But typically, that's going to be a benefit for us. It'll kind of memorize. We can also create a rule from this transaction. We'll talk more about rules, more complex rules later. QuickBooks will basically try to make kind of the rules up top, which it's basically doing up here. The problem with this, however, just note that when QuickBooks makes the rules for us, it kind of gives us a rule. We can't really go in and manipulate the rule. We can't add more detail or complexity to the rule. Whereas if we make the rule ourselves, if we say, I'm going to set up a rule specifically for you to follow QuickBooks, then at a later time, we can make that rule more defined and more complex. So for example, if we set up the rule that Edison is going to be going to the utility company, maybe later on, we have more complex transactions where the bank feed shows the utility company for one state versus the utility company for another state, and we want to set up a more complex rule for QuickBooks to be able to see that, break out the utility bill from one location to another and apply it to separate expense accounts, a utility expense account for one state and another. We'll talk a little bit more about that after we go through the major 2 sections we're going to have here. Right now, of course, we're gonna work with QuickBooks automatic settings, and anytime QuickBooks can help us out and memorize a transaction, then we're gonna say that's great. And then we can also add the attachment if you wanted to include things like the actual bill or something like that. You can do so. Obviously, not necessary to record the transactions for financial statements, but a nice tool to have in case you want that added detail in your data input. So I'm gonna go ahead and say add, and there we have it. Transaction added. Edit or undo changes under the review. Also note that QuickBooks is saying that they recognize up on this tab up top 2 transactions. So if I go to the recognize transactions section, that's where these green items are trying to say, hey, look, I saw Amazon based on your past history, which you may not have on your file if you don't have the past history. I think that should be going to furniture and fixture. And we could say whether or not that's going to be an appropriate rule or not. We'll talk more about that at a future presentation. And so notice QuickBooks, again, trying to help us out. When it gives us those different colors, the green, it's trying to help us out with that. Okay, let's go back up top. Let's go to the expense tab up top. I'm going to close this back out and just see what happened to this transaction. I'm going to go back to our bank account or our balance sheet. I'm going to hold down Control. I'm going to scroll up a little bit. And now let's go into the cash here. If I go back into cash, and then scroll down, we should see a transaction now for March. So there it is. It's at the end. There's the Edison. There it is. If I was to click on that, what's it going to look like? Is it going to go back to the bank feed screen? No, it's going to open up an expense form because that's kind of like a check form. That's the form that's used to decrease the checking account. So it'll always apply a form. QuickBooks will apply a form first if it can find one that fits the need. And if it cannot, it's going to use a journal entry. It's not going to go back to it's not going to go back to the bank feed. That's what QuickBooks does. It sees wherever you input it as a bank feed. If it looks like a type of transaction that fits into a particular form, such as an expense form, it will use that form. And then you got to kind of know what the transaction is related to it, the journal entry or the accounts affected, however you think about it. So we have here the 2 accounts that are affected. The fact that it is an expense form means the cash account went down. That's what the expense form means. The other side goes to utilities. That's the other expense. That's what's going to be on the income statement. So if I close this back up and say, all right, the other side, you can also see here we have the name, Edison. The split, meaning the other account affected other than cash, is in the utilities. That's an expense account. So if I go back up top and say, all right, where's the other side go? What did they do? I'm going to go back to the P&L, profit and loss, close up the old hamburger, and it's going to be down here in the utilities expense. So here's the expense. If I open up the utilities expense, then we can see the other side. Here's the one in January. Here's the one in March. It made basically the same thing. I entered this one. We entered this one in manually in the expense form. We entered this one in, as you can see, through the bank feeds. The other side going to the checking account, our cash account. If we were to open that back up, this is the other side. Remember, every transaction, every bank fee transaction, or any transaction that has a number affected on the financial statements has at least two effects on it. So you want to be able to, see what the two sides are going to be so you can figure out the problems that will happen. Next thing you want to look, I'm going to open up the hamburger over here, or let's do this on the, oh, what did I do there? That's not what I wanted to do. Well, let's do it here then. We're going to go then to the accounts down below, to the accounts tab down below. So I opened up the hamburger. We're going to the accounts tab down below. And you can also take a look at the chart of accounts. Here's the chart of accounts, closing up the hamburger. We're in the checking account. That's our cash account, our checking account. If you open up the register for the checking account, this may be a familiar kind of look for you to see things if you're used to working with a checkbook. Here we have our expense, kind of like a check. It's a decrease with it's a check with no check number. Here's the payment that we made for that $650. It's going to Edison. The type of form it's using is the expense form. And you can see here, it gives us a nice little C, which means cleared. Or tentatively reconciled, and then it gives us this little icon that basically says manually added from the bank feeds. So these were added from the bank feeds. So these little colorful items down here will let us know that they came from the bank fee transaction. They were added. We manually added, meaning we went through there and told QuickBooks, yes, add that item. Why does it say cleared up top? We haven't done a bank reconciliation yet. You might say, why is it cleared if I haven't done a bank reconciliation? Well, you'll remember that this transaction is completely dependent on the bank. So it's already, we know it cleared the bank because we got this transaction from the bank. So it must have cleared. However, it says tentatively reconciled because we haven't done the bank reconciliation yet. So what this is telling us, it's saying, hey, yeah, this came from the bank feeds. It's clearly cleared the bank because it came directly from the bank. However, you haven't yet reconciled it because you haven't done the bank reconciliation, which we still want to do, and that usually checks off our books from the bank books. In this case, our books are the bank books because we got our books from the bank. But we still want to do the bank reconciliation to just, double check that we did that process properly, as we'll do in future presentations.